Good morning, everyone. Welcome to the Modern Market, where every day we discuss everything to do with the modern market. That is the crypto market, even on a red day like today, the NFT market, and how to make some or a lot of money on the internet. Loaded up for discussion. Today we have, obviously, crypto markets are pulling back. We have the US announcing a new list of tariffs. And at the same time, we have many tech companies announcing record earnings. We're going to go through the stock market a bit as well. Second piece of news is the SEC announcing Project Crypto and what that means exactly. And then third, Strategy announces $10 billion in Q2 profits. That is a multiple of what Goldman Sachs made in the same time. And also their intention to raise another $4.2 billion. Also got the latest on price action, crypto NFTs. So stay tuned for that. And today I have Phunky with me in the co-host seat on screen, and I have Brett with me as a speaker on the Spaces, joining from the tattoo table. So quite an interesting setup to run the show today. And we're almost ready to get that started. But before we do that, just to remind the friends that nothing that we say here is financial advice. This market is extremely risky. We do not know anything for sure. So please do proceed with caution and exercise your own judgment. With that out of the way, Phunky, how are we doing today?
GM, man, I'm great. I love any days when you can get sats for less, right? So I think people are panicking over the market conditions, but ICO Beast had a great point and a post about this, that, everything is going to be risk on. Do not worry about this. It's just a blip on the radar. To your point, earnings were absolutely crushed across a number of many tech companies, Apple, Strategy, you name it. So I think that this is all just a very temporary thing as we start the new month. And it's also worth noting that July was the highest monthly close ever for Bitcoin. So we're just getting started, baby. Let's go.
You still remain bullish. You're wearing your HODL cap. Obviously, you have the gold chain. So nothing changes on that end.
This is the full actual outfit. So shout out to Vanek Intern, because not only do I have the hat, but I actually have the actual Genesis Hash t-shirt that I got from the Vanek Intern. So got both pieces going.
Love to see that. Brett, checking in with you, seeing if you're able to speak at the moment. How are you doing? How is the tattoo session going?
Able to speak, but can you hear me is the question.
Yeah, with a bit of background music, but we can hear you.
Yeah, I'm literally on the table now. So if it's like it doesn't sound too bad, I'll be able to tap in and give some commentary. But yeah, things are good. We're, like you said, I'm on the table right now, but I wanted to try to participate. Obviously can't stream, but just hanging out.
Awesome. Sounds good. And we've also been running the new Telegram group for our first couple of days. We got around 40 people in at the moment. I know there's a bunch more people who requested to join the Telegram. There's a ton of messages still in the Modern Market account. I have a ton of messages. There is no need to bump us. We're going to get everyone in. The only thing I do want to avoid is to send the link to another 100 people or so and then get banned on the Modern Market account by X for our link spamming. So just bear with us, trying to do those in sets and packs of 5 to 10 invites at a time. We will go through everyone. I think just given the amount of invites that we have, it's going to take us the whole weekend to do that. Obviously, don't want to post the invite to the Telegram publicly. So the only thing we are asking for is a bit more patience on that. But Phunky, how are you enjoying the move from Discord to Telegram?
Honestly, okay, I'm going to start off by prefacing one of my comments, right? Because I'm a Discord guy. At the end of the day, I know the people fall in camps, right? Like, I mean, Discords are nice and easy, right? They remind me of college when I was, back in college in the late 90s, early 2000s. You had internet message boards, which were all, demarcated, had nice categories. Discord's nice and slow. Telegram can be so frenetic, but to give you guys some due, like, I think some praise, I should say, you did a great job. It's really, really clean. So when people come into the Telegram, they just some that they really can't chat in, but just has some wonderful links, tons, very exhaustive when it comes to the resources. Meg and I are just spamming, cat stickers. So we're already loving it. People are in there laughing, having a good time. So I think when people get in there, they'll be pleasantly surprised. They'll be glad to be part of that community for sure.
Awesome. Love to hear that. And obviously we'll improve on that as we go. But we have a ton of things to get into. So let's get started as usual with the price action first, which is very red. I know I sound very happy. I am having a great day, but the price action is not reflective of that. We have Bitcoin being down 3% to 114.6K. ETH is down 6% to 3.6K. XRP Ripple is down 7%. BNB is down 5% to $760. Solana is down 7% to 168. Dogecoin, obviously not a major, but also down 8% to 20 cents. And then checking in with Hyperliquid, which is down 10%. That's quite steep, to $39.5. And Sui down almost 11% to $3.50. Unsurprisingly, on the meme coin side of things, doesn't really look any better than that. As I said, Doge down 8%, SHIB down 7.5%, Pepe down 10%, Pudgy 13%, Bonk 11%, SPX down 17%, Phunky down 10.5%, Dogwave Hat down 11%, and so on and so forth. I'm just scrolling through the list. Useless coin down 20% actually. So most of the things are down. 10% are down in the double digits. Also, Rect coin, which you mentioned yesterday, very happily. The Rect was up 20%, is down 20% now on the day. So definitely a very red day. I'm just scrolling to see if there's any exception to that, but it doesn't seem to be the case. It's mostly red, and more red for the memes as well. Getting into the main headlines, as I just described, the crypto market did pull back. We have the US announcing a list of new reciprocal tariffs for dozens of countries, and many tech companies who announced record earnings. We also have companies like Meta who are up, I think, more than 11% on that news alone. We'll definitely take a bit of time today to look at the stock market, because I think it's quite interesting to see that, and to also see the pre-markets for stocks specifically. And then last piece of news will be a strategy, looking at the $10 billion that they made in Q2 profits. Also, the additional $4.2 billion raise that they have planned. In terms of some notable price action, I said it's a red day for memes across the board. I mentioned the most notable ones. However, on the NFT side of things, we did see a couple massive sales, including one other side deed selling for 200 ETH. Autoglyph, another Autoglyph sale for 96.5 ETH, and the Ringer by Dimitri Cherniak, which I'm showing on screen, which sold for 36.4 ETH. Also, taking a quick look at the other JPEG majors, Pudgies are down 5%, 15 ETH floor. Other deed moving up, they are up 13.6% at a 0.17 ETH floor. And again, we said it. There was a massive sale for a specific one. Bored Apes are mostly flat on the day, 12.5 ETH floor price for them. Moonbirds are down a touch, but still above a 2 ETH floor, 2.09 ETH that is. And Rect guys corrected 12%, moving in line with the token. Miletus are down 4%. Clonex, which we reported on, and is still in the top. It still feels weird to mention that.
It's down though, so B-Check can sleep safely tonight. Like, I know he was worried about Clonex just pumping.
It's still up 80% on the week. It's still sitting at a 0.31 ETH floor, so that is a touch worrying. And last but not least, Azuki is also down 2% at a 2.06 ETH floor. That's it for the NFT side of things. And going to the Web3 Roundup to get you the news from the rest of the space, we have the SEC chair, Paul Atkins, stating that most crypto assets are not securities. We have Stable, the stablecoin chain, announcing a $28 million seed round led by Bitfinex, with the focus being on a USDT-focused blockchain. Ethereum announcing the plans for the next 10 years, aiming for 10K TPS and quantum resistance. Coinbase announcing tokenized stock offerings and prediction markets to come for US users. Mill City, the Sui treasury company, to buy 76 million Sui after a $450 million private placement. Tether announcing $4.9 billion in Q2 profits with $127 billion in US treasuries. Absolutely insane number. And then Circle announces USD functionality on Hyperliquid. Timeline did get quite excited about that yesterday. In terms of some more news, Solana LP protocol Meteora announces the points checker for season 1, which went live. So quite a few good friends of the show having very, very nice numbers, points in the millions there. I think you shared yours as well, Phunky, if I'm not mistaken.
Yeah, I mean, I just, you know me, I'm a DeFi dabbler and a button masher, right? Like I don't even, I think I've only been in one LP pool and I had like 5.7 million points. I'm like, oh, is this good? I have no idea, no context. I drop it in there and Oxy's like, yeah, that's not bad. I've seen people with billions that are market makers. And then only to come to find out after that he has like 15 million, like triple, I think in 2 different wallets or something crazy. Shout out to Oxy. Yeah, so I have no idea what that's going to mean. And I'm sure whatever the media or token launches, I'm just going to eat it for my Bitcoin.
Yeah, Oxy has posted 15 million in season 1, 50 million in season 2. He's been quite busy on the LP game. He's killing it at that. Then we have Proof of Play announcing a new game, Infinite Tides on Abstract. The original pink hat worn by Aki the dog with hat meme is up for auction August 5th as the final piece of news. Apart from the Meteora stuff, Phunky, is there anything you wanted to comment on specifically?
I mean, I know we're going to talk about the Sailor stuff in a little bit, so I'll just hold off till we actually have a broader conversation. I will just say about that very briefly that I was mesmerized last night. I tuned in probably 15 minutes late because I had some meetings and stuff like that. But then I watched pretty much all of his stuff, and then it continued on with the CFO, and just I have a lot to share when we get to that part of the show today. But yeah, really interesting stuff.
The thing I wanted to comment on is Tether. Obviously, insane profits for Tether as well, but the $170 billion that they hold in US Treasuries is getting to like such an absurd size. I remember when the first time we reported on the fact that they surpassed Germany's holdings in terms of US Treasuries. Is there a point where you will find this worrying that they are accumulating this amount in US Treasuries, or is it just obviously part of the game of growing the stablecoin market cap and having the backing for that?
No, I mean, I think it's the latter. It's just it's part of the growing and continuing, if you will, the dollar hegemony across the globe. I mean, last year at the BA summit, when long before Genius passed, Senator Bill Hagerty, who is the one who sort of architected the Genius Act in the earliest form and was talking about that. He was on stage at the summit talking specifically about stable coins being the thing that will further proliferate the dollar into other economies. And I can't remember if I said this on a show before or not, but one of my favorite I'm not a conspiracy theorist, but I had enjoyed reading this and it did make me chuckle, where it was basically saying that Paolo from Tether is a CIA plant and an agent, and they're trying to proliferate Tether in all of the developing world so that the dollar becomes the dominant form there through a digital version rather than whatever local fiat currency you have in, say, Venezuela or Argentina, you name it. So no, I think that I don't think it's worrying. I think that what they're doing is slowly shifting the treasury buying burden. Of course, as a fan of Arthur Hayes and his essays, he's been pointing this out for a long time. This is where you need somebody to absorb the treasuries. The banks don't want to do it. Now they're just going to move it over to the stablecoin issuers. And I think as we get that broader proliferation of stablecoin issuers, right, whether it's Amazon, Walmart, all these people, as long as they have distribution, they're going to get involved in this game. There's money to be made, and the Ponzu that is the US dollar will just continue.
Yeah, I like the point on the emerging countries and other economies. And while I don't believe the CIA plan theory, I do think it makes sense to think about that from a strategic perspective of just seeing stable coins as a way for the dollar to go around the world. So one more stat that I want to share, and then we're going to go to Brett, who has his hand up. There we go. This is from the official Treasury website, and it's a table where you can see major foreign holders of Treasury securities. Biggest holder is Japan. All of the numbers are in billions of dollars, with $1,135 billion worth of treasuries. Then you have UK with 800 bill, China with 756, Cayman Islands with 440 bill. And then the list goes on with Luxembourg, France, Ireland, Switzerland, Taiwan. Then we get into this region of Norway with 187 bill, and then Saudi Arabia with 127 bill. And this is also the size that Tether has. So it puts them in the, 369, like roughly in the top 20, top 15 of biggest holders of US treasuries worldwide. Brett, curious to hear your thoughts on the treasury discussion so far.
Yeah, this isn't typically my vertical, but hearing Phunky describe his how this like the progression of this stuff, where like it tells you where the end state of this is, right? The only reason that the devaluation of the dollar is being propped up at this point is because it has now taken that money, the US dollar, it has digitized it and is now selling it effectively to a bunch of third world countries who are buying it unknowingly. Right. And eventually like that pool is going to run dry. Right. So I know like it's the common trope of our ecosystem that like, yeah, like all fiat goes in this one direction, but it kind of paints the picture pretty clearly here that US dollar is being propped up and is like prolonging the inevitable by going to these next sellers. But who is the next buyer beyond like the literal world? Like it's like at some point you run out of buyers.
You're muted, Legendary.
We had a Polymarket post that said there's a 3% chance that whatever unknown object they found in space is an alien starship. So maybe extraterrestrial beings are coming to buy the dollar and buy our ETH bags. No, but very, very, very good point on that. And I also wonder from the policy perspective of those countries which are getting flooded with digital dollars in a sense, how they are thinking about that. Because I feel like that's a very tough line to balance. If you're a country that has an extremely high inflation rate, you're obviously realistic enough to understand that whatever your local currency is not sustainable to be used by your people. It's not sustainable to have, obviously wages will be paid in that, but you will have people who will convert into something safer, into a foreign currency, and stablecoins do make that a ton easier. But I'm still wondering how these countries are thinking about that. I'm specifically not naming names on a like 5, 10, maybe 20-year horizon, because I can't imagine that they are happy with dollars just flooding their countries and de facto starting to replace their local currencies.
I mean, I think to your point, it's going to take a long, long time for this to actually happen and play out, right? I mean, we don't appreciate some of these truly macroeconomic backdrops and how long it takes for these things to happen. I think at the end of the day, for the average person, and I'm just speculating here, I don't think they really care. I think what they care is that, can I buy bread? Can I not literally bread who's on the table right now, but I mean bread in the sense of like, can they afford food for their families, right? So like, and when you think about where Tether is, it's largely the developing world, younger populations who are going to embrace technology. They're ones that are just going to look to leapfrog some of these things. So they might see it, at least in the immediate short term or medium term, say that next decade, of, hey, I have easy use, I can buy things, I have a digital wallet, I can just pay in Tether, and it's just a matter of, we had William Quigley on our podcast, and he said the number one thing people always care about is convenience. Just how convenient is it? So I don't think that they're really going to think about sort of the geopolitical ramifications of what that means for the dollar to take over their economy and so on and so forth. If it's going to be more stable and they can get more goods with it, even though for us in the West, it is an ice cube, right? Look at your trade with the euro, that, the dollar is sort of melting away. I think ultimately, hopefully, as a Bitcoiner, what I would like to see is what every Bitcoiner dreams of: hyperbitcoinization, right? Where people start pricing things in sats, because the USD value of Bitcoin is just going to continue to rise when you compare it to USD, because the USD value is just in free fall. So I don't know if it would matter to the average person on the ground, but I think certainly politicians, bankers, those who stand the most benefit in their local currency, their fiat, because, the whole Cantillon effect of you're generating the money first, you have access to it first. So those government officials, those banks, they're probably going to care a lot more. But I think for the average person, it's probably not going to be as big a concern.
Yeah, I tend to agree with that. Ultimately, if you're a consumer, you want to make sure you can like upkeep your lifestyle or improve on that. So you won't care about what currency that is, or if it's priced in Tether in your local currency, or in Bitcoin and sats. But definitely from a politician's, from a government's perspective, as you said, it's a question of control. It's a question of being able to profit on that, to be the issuer of the currency that's used in your country. And that then is a whole different story. But you mentioned one term. You mentioned hyperbitcoinization. You mentioned Bitcoin, of course. And there's one thing I want to get into today before we'll get into the three main headlines. And that is our sponsored segment with Polkadot. And I do want to talk about Bitcoin today because we mentioned yield farming on hydration multiple times and talked about earning an APR of 13 to 30% with TBTC on hydration. Then somebody in our community actually asked how to get native Bitcoin on Polkadot to start farming. So here is a step-by-step guide on how to actually do that. Our journey starts with TBTC, which is an open source project that allows people to use Bitcoin in DeFi apps. Has been operating safely for 4 years, bridged over 11,000 BTC from Bitcoin to Ethereum. So that was built as a bridge to have ERC20 tokens that represent wrapped Bitcoin. Each TBTC token is backed by one Bitcoin, and the current total supply of TBTC is 5,722 Bitcoin. Every Bitcoin is redeemable at any time. And if you want to mint your TBTC, you can do that in 3 simple steps. First, you provide an ETH address and a BTC return address to generate a unique BTC deposit address. Sounds very complicated, but you just connect your wallets and click 2 buttons and that's it. Second, you make your BTC deposit to the address that's being provided to you. And third, then you mint your TBTC, which you then have on Ethereum. The next step then is to go to hydration. Hydration has, there we go, let's get it up on screen, has a cross-chain swap, has a bridging feature. So you can bridge your TBTC from ETH directly to hydration. And once that TBTC arrives on hydration, you can head to the liquidity tab and start earning currently a 13% yield on your Bitcoin. And that's how you turn your Bitcoin into TBTC and make it a productive asset. Thank you to Polkadot for sponsoring this segment, and stay tuned for more Polkadot explorations.
Just jump in real quick. You guys, if you're doing that, you can actually go straight to your native Polkadot address because it's going to auto-populate the same like 0x address from your EVM wallet. But if you want to, because I always just send it directly to the one main account that I use called that Phunky Vault, and that's like my bigger holdings for like the Polkadot stuff. So you can go straight from an EVM address into, and because Snowbridge on the back end will convert it when it puts it into your Polkadot native wallet. And for those of you who have never used Threshold, I'll just say very quickly, I have used it. It is a wonderful setup. To your point, Legendary, super, super easy. It is literally just a few clicks. And for people who don't know this, Threshold, the team, has been in crypto for a very long time. They used to be the team, if you remember, the token called New Cipher. And so Threshold is this really incredible, like you can think of it like as a 10,000 signature multisig. It's a kind of very specific MPC that's used in the background. So it's non-custodial. You're just kind of, it's holding the native Bitcoin and it's issuing that TBTC against it. And it's a great way to again, literally stack sats every morning. In fact, when the show starts, I didn't do it this morning. I always just claim my rewards and I swap right for more TBTC.
Nice. Thank you. Thank you for additional context on that. There's actually a question I wanted to ask you on your Bitcoin portfolio. If you're comfortable to share that, what is the proportion between the BTC, the sats that you're like stacking in cold storage, and the relative amount of BTC that you're like happy to work with and use as a productive yield earning asset?
I want to say, just rough math off the top of my head, 10%, maybe 15% at most. It's good. I've gotten more comfortable with it for 2 reasons. One, I can't ignore like the incentives. It's just way too high, especially when I'm just stacking more sats like every single day. And then more importantly, I feel just knowing a lot, I know the hydration team really well. I know the Polkadot tech really well. There's no smart contract risk because all these features are built right into the runtime code. It's called pallets in the Polkadot SDK architecture. So I feel very comfortable and safe using it. And then on top of that, I've continued to buy some larger chunks, which I'm just sending to cold storage. And so that the percentage kind of keeps shrinking, because like I always tell myself, don't get more than 10%, but then I buy a couple more chunks, and those I just tend to send to like cold storage. And so now that number has grown a little bit, because I'm like, well, the bigger primary cold storage stack is getting sizable. So like maybe I'm a little bit more comfortable exposing some more to DeFi. And again, I just can't ignore the incentives. It's just, like, where else are you going to earn over 20% of Bitcoin? It's insane.
And looking into the future, is this a ratio you think you want to keep? Because the overall stack is growing, and obviously those 10% then become more meaningful as time passes, as the price of BTC goes up. Do you want to decrease that and be even more conservative and are just happy to have a smaller part earning yield? Or do you want to do the opposite and increase it and go to like 15%, 20%?
I don't know if I'd necessarily ever increase it beyond like 20%. Might be the absolute max, just because we feel very safe. We're at the point, like, you know, we had that OPSEC conversation some weeks ago, and I was talking to Aaron about it, and I said, you know what, we should probably buy some more hardware wallets, split it up into different wallets, smear those seeds so that way we know how like they're broken up. You know, maybe throw one in a safe deposit box that's outside the house, put one somewhere else that like is far away from here, and then have like our main one. Like, I don't know, like it's just, we're at this place where as the stack continues to grow and where this is all going, we feel like we need to take better care of it. But I think too, just, yeah, 20% seems to be a lot. I'm just, again, very cautious, conservative person. I mean, most of our portfolio is Bitcoin. You know, that says a lot about, though I may look like a degen wearing, you know, a hodl hat and a gold chain, I'm really not that big a degen. So.
Just because you mentioned the shamir term, for those who are not familiar with that, basically this is a way to back up your seed phrase. And for example, say you create unique shares of your seed phrase, and you set a certain threshold similar to a multi-sig, how many of those shares you need to recover your seed phrase. Say you do a 2 of 3 shamir backup, that means you will generate 3 unique shares, any 2 of which then can be combined to recover your wallet. Just to give this additional explanation on that, it is a very, very smart recovery standard to use. Personally, on me using my Bitcoin, I would say that figure is like 25% for me, where I put Bitcoin to some sort of use. However, I'm extremely conservative with what I do with my BTC. I like borrowing stables against that, but I never push the LTV. I could borrow like 60, 70% loan to value against 1 Bitcoin, but I'm way, way lower than that. Like typically against 1 Bitcoin, I borrow $35,000, $40,000. So I keep it at a 30 to 33% LTV to still be fine. If BTC would basically down 50% tomorrow, I wouldn't get liquidated on that. So
yeah, that's what I was gonna say.
More happy to put a higher amount to work, but very, very careful when it comes to the LTV and very conservative there.
The crazy part is this is the cycle where Aaron and I think, and English is probably going to kill me for saying this out loud, but we've talked about it, and we may finally sell some. We may, you know, like as the cycle peaks, maybe it's like, maybe we should sell half. Maybe we should sell a Bitcoin. Like, you know, it just, because that could then, there's going to be a bear market, right? And then when you think about, yes, we're hodler by nature, but if you sell a full one, and then, you know, let's say it goes back down to 85 or something like that in the bear, well, that's more weight. You know, you're certainly going to add a lot more to the stack if you're patient. So I don't know, may start doing that strategically now that the stack has grown.
What would you sell it against though? USD, gold, anything else that you would like to trade it for?
Dollars, like just for the fact that you can still, yes, we were talking just earlier about the dollar being on the decline. However, in crypto, you have so many incredible opportunities to earn against those dollars that you're far outpacing the debasement and the inflation. So I feel like that is a great, I mean, that's effectively what I'm doing right now in hydration, right? Like I took our long-term savings that we have in cash, and I'm like, this is pointless. Like, why are we keeping this cash? Like, and yes, I don't want to touch it. I want to buy crypto with it, but I just converted it to stables, and it's in the stable farm, because then that just helps And what I'm effectively buying with it every day is Bitcoin. So, I mean, it's like I'm being paid interest in Bitcoin. So I feel like you could do the same thing, take those stables, farm them out, and just use the proceeds from the payment to continue to accumulate Bitcoin at whatever price.
Yeah, that's a very good point, and also super interesting too, because we've been having these like portfolio conversations more regularly on the show, and interesting to hear your perspective on that as well. We have about 25 minutes left in the show, so I think it's time to get into the main headlines, starting with the first one, which is to do with, we said it multiple times already, crypto markets are pulling back, but then we also have the US announcing a new list of tariffs, and then we have the tech companies reporting huge earnings. So I'm gonna just try to break all of those things down, give a bit of a roundup of what's going on. President Donald Trump is increasing the tariff on Canada from 25 to 35% beginning on Friday. That is after an executive order which he signed. He is also adding, or he also announced, an additional 10% tariff on all countries. So he also announced higher tariffs for countries the US has a large trade deficits with. Then we said earlier this week, we had the agreement that was struck with the European Union with a tariff rate that it was set at 15%. However, I would say the mood in the EU is not the best about that. There's a lot of criticism that too much was given away in the deal, and macroeconomic experts are saying that 0.5% of GDP will be lost as a result of that. On top of that, the US also made a deal with Japan, which agreed to invest $550 billion into the US to rebuild and expand core American industries. And they also agreed to pay a baseline 15% tariff rate. Then Syria is faced with a higher tariff rate of 41%. Myanmar, Laos will be charged a 40% tariff, and the list goes on. Switzerland, 39%. Serbia and Iraq, 35%. So this was quite an extensive list on the tariff side of things. Moving on to the next part of this news is, let's actually set up like that. If we look at the pre-markets, we can see that everything is down. S&P 500, Nasdaq, and Dow futures are all down 1% to Nasdaq 1.1%. And that is interesting to put that into context with the earnings that we've seen yesterday. We had Microsoft and Meta rising 4 and 11%. We had Amazon climbing 2%. Apple had a bit of a drawback there. We had Broadcom, Tesla dropping 3% each. But at the same time, as I said, we had many of those tech companies reporting record quarterly earnings. If we look at it like that, sharing Finviz on screen with the one-day performance for stocks, you can see Meta being up 11.2%. You can see Microsoft being up 4%, Oracle being up 1.2%. So you can definitely see the large green chunks in mostly around the tech industry, where you had massive earnings, which people didn't expect to that extent. So I find it altogether an interesting picture, because we had obviously the FOMC meeting that week, which surprised many, I would say, in its hawkishness, because the market was kind of anticipating to see rate cuts in September. That now has shifted. Had the poly market up for that yesterday. Now we saw more than 60% thinking that rates won't be cut in September. And then we have this dual picture of tech giants reporting high, even record earnings in some cases, but the general stock market pulling back, Nasdaq futures being also down 1.1%. And as a result of that, crypto doing the same thing, but in a more leveraged way, with BTC being down 3%, ETH being down 5.5%. So that is what's currently going on. Also had a look on what D-Farmer, a legendary trader we're quoting quite often on the show, had to say on this. And he said he's not looking to bid at these levels for now. He's rather waiting to see what is happening. There we go. This is the post. So he said, not looking great, worse yet, I don't think we're done either. Zero rush to get into any longs, plan to wait the whole day and maybe start longing into the asylum weekend. A start fight unwinds, but only if we go deep enough. And I don't think this is it. Move slow. And also, this is what I'm curious to get your thoughts on, Phunky. Is this additional take of his, you won't like it, but pure meme coin might be done for good. And that's a good thing. And just to be clear, I'm talking our meme coins, Pengu and Rect, are brand culture coins with valuable IPs and an underlying product. So he doesn't mean them specifically. So I'm not going to ask you if you're worried about the general market, because I know you're not and you're in for the long game, but more curious to hear your thoughts on this meme coin take by DFarmer.
No, so yeah, I think he's spot on. I'll just start there and say that today I had a friend from the Polkadot ecosystem, CapEx. I was kind of having a conversation with him. He said, I don't think there's going to be an alt season. And I've said that for a long time. I don't think that there's going to be an alt season, at least not anything like we're used to in previous cycles since I've been around, like 17, early 18 or 2021 or, into very early 22. It's just because of the dilution, the horizontal dilution, all these other problems. I think, and yesterday I was having a meeting with a team in El Salvador, and we had a conversation after, and these guys are very serious players. And basically what they said is what we're witnessing is Darwinism at its finest. I think most of the stuff that is produced on Pump Fund, you name it, is total trash. You guys have highlighted this for a very long time, insofar as what we need to be focused on are the things that are generating revenue, like Hyperliquid, the things that are catching an institutional bid, right? Whether that's Bitcoin or Ethereum. So, I just don't see a world in which memes are going to survive. The trenches will probably carry on in some form. And yes, you'll always have scammers and so on and so forth. But I mean, on a long enough timeline, say the next 5 years, certainly the next 10, so much of this garbage just absolutely disappears. We all know it's vaporware. I mean, to the point yesterday about the show of our love for gambling everywhere, right? I mean, that is true. People are still going to do it. People are still going to participate. But I don't think we'll see necessarily any of the previous all-time highs that some of these things have achieved. I think I do agree with Rahim a good bit. I think that maybe aside from Pengu and Rect, like as a culture coin, I think that, and this is probably, I would extend to also the classics like Doge and Shib, but I think Pepe probably has some staying power because it is such a Web3 culture, meme. So I think that there's something to be said about that. But broadly speaking, I would completely concur with DFarmer's take insofar as meme coins as a thing, as a category, are probably eventually going to die off because it's really nothing more than just another form of gambling.
Yeah, I like the distinction that you also made between the meme coins, which have been around for a long time, the Pepe, the Doges, the Ships, maybe even to have this staying power. I mostly agree with what you said, what DFarmer said, but maybe with the small distinction that I don't think that this category will go away as a whole. It will, in my opinion, stay, but it will become even more short-lived. Like, you will always have token speculation around certain news viral moments that come out, but it won't be a thing like Peanut was around for what, a couple months. Elon posted a couple times. It did run up. So Peanut was a trade you could have had on for, I don't know, 2 months, 3, maybe. Yeah, no, 4 months is stretching it. But I think these time spans will just get shorter and shorter and shorter over time. But I don't think that this form of gambling goes away because gambling is only going to get so much more popular. The thing I want to do now is move on into the next headline, which is to do with the SEC launching Project Crypto. And that came from the chairman, Paul Atkins, who announced that at the America First Policies Institute's event, American Leadership in the Digital Finance Revolution. A couple of quotes from that. Our regulatory framework need not be anchored to an analog past, unkind to new frontiers. The world is not waiting. America must do more than just keep pace with the digital asset revolution. We must drive it. And What does that mean in more precise terms? So they launched Project Crypto to integrate blockchain into financial systems, aiming to establish US leadership in on-chain markets by 2027. It's going to be a phased implementation, targeting real-time settlements, fraud reduction, automated compliance across securities, banking, derivatives, regulatory reforms. We already had the Genius Act, which we talked about on the show quite extensively. And as a part of that, also updated tax guidelines and AML, that is anti-money laundering standards, to go in line with that. Is there anything that stood out to you from the Project Crypto announcement specifically? I know there's like also a transcript of the whole speech, but it is way too long to go through all of these points.
Yeah, I mean, nothing really immediately stood out. It just sort of dovetailed nicely with the release of the full report from the previous day, that, the stuff that we were talking about with Bo Hines and the president's working group. And obviously I've been knee deep in a lot of these things through the Blockchain Association. It's a long time coming. And I think that this is, for anybody who's been a pragmatist and a middle of the road kind of person, this is what we've all wanted. Even if it does sort of kill off in a sense the meme coin bags, I think to have that institutional adoption, to have that, as Brett has said, infinite institutional bid, right, on our Bitcoin, on ETH, and probably on a couple other high quality chains that have been around for a long time, Solana, no doubt, and I think that this is only a good thing. Right. We need sort of that regulatory clarity. I think it makes perfect sense that the Act for Market Structure is called Clarity. It's long overdue. We've had an industry that has been flourishing for the better part of a decade and a half. And we had a government that was just obstinate, recalcitrant, you choose your word, about just how they did not want to, because I think there was always a view that looked at this, probably because of its cypherpunk roots, that this is anti-government, that this is something that, is people trying to circumvent the system. And while those things may be true, you can't discount the fact that this is a tremendous technological innovation, right? Like there was that clip that went around a few weeks ago or whatever, Peter Thiel talking about, on Joe Rogan, the internet was a massive change in our whole culture, society. It was such a technological leap forward. And he says Bitcoin is almost as big a leap as the internet. And what happens with many of these things, you just think about the adoption curve. We only realize this most of the time in hindsight. The conversation I was having with the banker the other day when I was settling up my father's affairs and transferring accounts, and she got interested in Bitcoin, and I was telling her about it. And I said, this is very true. Here we are 15 years after Bitcoin started, roughly, right? It will be 20 years, right, total, at least, before the majority of people are like, you know what? Maybe we should have paid attention to that Bitcoin thing. And maybe even another decade before people like, oh, well, it was obvious, right? And so it's often in hindsight that we see these things. So I think it's a good thing for the industry. I think, especially for us, here at Global Stake, infrastructure provider, we're targeting institutions. We're not worried about retail. It's about the big money is here to play. They want this clarity. They want this to kind of help the industry grow and turn it from a $3.5 trillion asset class over the next few decades into a $100 trillion asset class. And I think it's going to happen, and this is going to help make that happen.
Yeah, that's a very, very fantastic point that you're raising. And the only thing I would want to add to that is that I think this adoption is actually happening pretty fast. If you look at how much time it took ETFs to get to the level of popularity, and ETFs are rather new, I don't want to call them asset class, but like investment form. It took them decades to get this popular and to like now have this financial independence, retire early movement where people are stacking S&P 500, MSCI World, increasing the monthly savings rate, trying to retire early. That adoption took way longer than what we've seen in Bitcoin over the last 10 years. And talking about Bitcoin, I do want to use the last 10 minutes of the show to get into the third headline, which is to do with strategy announcing $10 billion in Q2 profits and with the intention to raise another 4.2 billion. I'm just going to keep it short on my end because I know you have so much more to say on that, Phunky, than I have. So the news is that Strategy, obviously the largest corporate holder of Bitcoin, posted second quarter operating earnings of $14 billion. That is $32.6 per share, and net income of $10 billion. Just to put it in perspective, that's nearly 3x more than Goldman Sachs did. And quoting from the CFOM, strategy has achieved a year-to-date BTC yield of 25%, meeting our full-year target well ahead of our initial timeline. Obviously, that also has to do with the fact that BTC went up in price nicely in terms of strategy's stock price. It did go up in the after hours of the trading yesterday. It's up 34% year to date. And the other aspect that I wanted to mention is the raise. They did place a new product called STRC with the intention to raise another $4.2 billion. But Phunky, I know you have much more commentary, much more color to add on that, so I'm just going to hand it to you.
Okay, yeah, I have a lot of color to add on this. So I obviously goes without saying, for those who are listening and haven't heard me talk about it before, I've been a big MicroStrategy bull for a long time. Back when he first announced they were going to start buying Bitcoin, this was the summer of late summer 2020, I think, is when MicroStrategy said that they were going to do this. And I immediately just aped, right? I just bought some MicroStrategy, and at the time, and then I unfortunately, maybe not unfortunately, but I sold some, because if you guys remember the previous bull run, what happened to MicroStrategy price, I probably bought it somewhere in the $120 to $150 range. It went up like by February of 21 on that first big leg up for Bitcoin. MicroStrategy hit like $1,200 a share, and I just sold half of it. And I was like, okay, this is crazy. This is what, this was like, looked like a meme coin, right? In equities, which we see now, like look at your Circle trade, right? I mean, that's a good example of when we see these insane movements in equities, which we typically have never seen before. And so I sold some. Where I made a big mistake was not doubling down, because in the bear market back in like January 23, when I was starting to think about buying Coinbase, MicroStrategy was all the way back down at $150. And then it continued to rocket up. I almost pulled the trigger and sold more. I literally had a limit order set at $2,000. This is before the split. And that particular day, it got to $1,999 and like 87 cents or something. So it didn't trigger my limit order, thank goodness, because since then that 2-for-1 split means I've doubled up my money for those shares I would have sold. Now, over time, especially in the last year, I've gotten concerned, because one of the things that he continues to do to make up these aggressive purchases is dilute the existing equity holders, those who have shares of MicroStrategy. He's been just basically creating more shares out of thin air, right? It's sort of a wonderful irony in the fact that equities, these companies can just issue more stock, right? They talk about fiat and being able to just print more money. Well, you could do the same thing with your stock, but you dilute your existing current, stakeholders. So he'd been doing this until he started introducing these financial products. So what he positions in the earnings call is that strategy is becoming even something more than an actual Bitcoin treasury company, but instead is actually being a financial products company, specifically financial products that deal with Bitcoin. And I didn't tweet this one out, but I have it set up here, and I don't know if I could share my screen or not. I could.
You can just pop it in the private chat, and I'm going to bring it up, and you can.
Oh, okay. Hang on, let me put private chat. Let's see if I can just drag and drop this here. No, it doesn't.
Just copy paste the URL into that.
It's not a URL. I just have the actual, like, I took a screenshot during it. But anyhow, so we know. I'll just verbalize it. They started with these at the market offerings of these new products. And what the earnings call made very clear was that each of these products serve a very, very specific purpose. So for instance, in my wife's Roth, because we have two Roths, so I try and diversify between the two. The MicroStrategy is in mine, but what I bought in hers was the first one that was launched, which is called Strike. Now, Strike pays about an 8% quarterly dividend, and it is a convertible note, which means for every 10 Strike you have, because it's worth 0.1 MicroStrategy shares, you could convert that to MicroStrategy. Now, you wouldn't want to do that right now, for instance, because Strike obviously it's a massive premium. It's $100 a share. So like if you had, that's $1,000 versus MicroStrategy, which is trading at $400. So that one, and what's interesting about this chart, and I will post this later, so you guys are actually, you know where I could drop it for those who are already in the Telegram. Let me just put it in there so you guys can see. Brett's sharing his tattoos. This is what I'm sharing so you guys can see it. So Strike was the first one to launch, right? And it's on an XY axis where it shows the volatility versus the seniority and how these things get paid out. So you'll notice the brand new one, Stretch, which is the variable. This is sort of like a Bitcoin bond. And this, they're going to try and keep it hovering between $99 and $101. And then it's going to actually have this dividend that's constantly paying out. And when the dividend, when the price gets too high, they'll reduce the dividend. And so they're trying to always just keep it in lockstep. Now, this one is very high on the seniority list, but it's low on the volatility because they're trying to do some financial engineering to keep the price stable. Then, of course, you have Strife, which is the one that's a long duration. The Stride is the shorter duration. So they really thought about different market participants. Like, who would want a long duration versus a short duration? Who would want the convertibility versus just saying like, you know what, I'm okay with that. Now, the other thing too, you got to remember, none of these give you voting rights because they're all preferred stock. And this is something that's true across any preferred stock. You do not get voting rights the way that you would if you had MicroStrategy shares. Now, I thought what was most interesting in the earnings call, however, is that they completely allayed the fear that I've had, and where insofar as they kept issuing these various, before the financial products, they were issuing the MicroStrategy shares. Now they flat out told you, they laid out the playbook, and they basically are talking about MNAV for so that's basically the position relative of how much Bitcoin they own versus the share price. And within certain windows, they will issue more shares. So right now, when it's below 2.5 MNAV, there's like, sorry, we're not issuing any more shares. If you want MicroStrategy, you got to buy it on the open market. So it's going to introduce buy pressure to the share itself. Once it gets above $600, but below $1,000 in share price, based again on the numbers, like if we took a picture and captured that in time yesterday, at Bitcoin being, I think as of date, they had it at 118,000. So they said between $600 and $1,000, they will strategically issue shares. And that puts the MNAV, I think, under 4. They will strategically issue shares so they can acquire more Bitcoin. If MicroStrategy goes above $1,000, they're basically like, game on. We are going to issue. So what they're now even doing is treating the actual equity itself as a vehicle to continue to accumulate Bitcoin. And it's all just mathematical engineering to kind of figure out like, what are the various points at which it is beneficial for the shareholder to be somewhat diluted, knowing that we're going to be acquiring even more Bitcoin. And it was just, like I said, that tweet, at that point, I was just sitting there like dumbfounded. Like, I couldn't believe the level of thought that went into this. And I'm not one to believe the hype, but like they were saying, this earnings call is going to change the way that people look at MicroStrategy forever. Oh, and that's the other thing too, Legendary. The comps that they were showing in terms of the amount of money that they're making versus other competitors that have, like, they're roughly worth $120 billion as a company, right? MicroStrategy.
Yeah. But
their numbers, they were like the 8th or 9th biggest company in terms of just like the profit that they're producing at that 25 billion. They said that within the next, it's quite conceivable that by the end of the year, they'll be in the top 5. And they think that within certainly the next 5 years, they will probably overtake even Berkshire Hathaway, which was a giant, a monster, even compared to Microsoft, Amazon, all the other companies that were ahead of it in terms of like the money that it actually consumes, holds, whatever. It was even above that. They think within like 5 to 10 years, they'll probably even surpass Berkshire Hathaway, which is insane. So now I'm in this weird position where it's like, do I ever sell any MicroStrategy again? Like, I don't know. Like, and I worry even less that we've had this ongoing conversations about worrying about treasury companies. I don't worry about MicroStrategy at all now. Like, just seeing sort of the full playbook. Really, really interesting. If people want to take a deep dive, I would highly recommend watching the earnings call because they put it out and you can go back and watch it retroactively. But it was very enlightening to see sort of the big picture where they're taking all this.
This has been incredibly insightful, super, super helpful. A lot of new information for me as well. Definitely gonna take this bit of the show, going to the admin talk, and clip that and have that posted, because that is the first time that I now understood how all of these different offerings are working together, and that there is a placement strategy for different time horizons. And it's not I was under the impression it was like more experimenting with what products could have a product market fit, but it seems from what you've been telling that is way more strategic. They exactly know who wants what kind of product, and this is how they are going about that, while still keeping the dilution in mind and keeping the share price for the actual shareholders in mind.
Very aptly named as strategy. And one of the things too that they talked about too was the growing retail participation. So when it was the one before Stretch, which I think was the Strife, the third one, it had like 150 million at the IPO at the ATM, like when they actually put it on the market. And then it went like 3x or 4x from there, like between, in fact, the Stretch was the biggest IPO this year, bar none. They have a bar graph, like everything, it smoked everything else, like in terms of the amount of money that went into that. And I think, the bulk was still, of course, institutional, but it was 570 million or something like that of the however many billions raised was just retail participation. So they're even showing that the average person, the person, like, admittedly, we're still retail, right? Are the people who are buying these things up. So, and I will also say right now, like I think it's under what it launched at. It was like $94 when I looked yesterday. So if people were looking at Stretch as that longer duration, the one that's like the bond that just kind of floats at that $100 but pays that perpetual dividend, and Oxy was talking about just the idea of, I can't believe they're paying a dividend, which I've also like, how are they able to pay the dividend? Because we think of MicroStrategy as sort of this business solutions company that doesn't generate a ton of revenue. Effectively, it's because they have such good credit. So they're just kind of continuing to borrow, and they can use that credit to pay out the dividends. I mean, if it ever needed to, yes, they could have to sell some Bitcoin, but like the way the targets and projections show now is, and he of course has various assumptions. Like if Bitcoin has a CAGR of 10%, here's what it would look like. Here's how this would impact the price and our dividends and what we have to pay. If it has 30%, if it has 50%, which was like the maxi position, it just like all the spreads, the credit spreads just evaporate, and they could just keep doing this. They could just keep using the flywheel to generate more and more money. It was insane to watch.
And CAGR being the compounded annual growth rate. Super, super helpful, super insightful. Phunky, thank you so much for stepping up and co-hosting with me today. That does bring us to the end of the show. Thank you to Brett for joining us on stage. I think we lost you somewhere throughout the show on that tattoo table, but it's been a great show. Thank you to everyone joining us in the audience. Once more, the reminder that it will take us a bit to get everyone who's asked for that to be a part of the Telegram group. I am sending out invites as the weekend is progressing. I just don't want to get the account banned. In the meantime, we'll, as always, also upload the episode to Spotify, to Apple Podcasts, and obviously we are going to be back on Monday, same time, same place at 7 a.m. Eastern Time. In the meantime, have a great weekend and see you on Monday.